Microphone check and screen share check, please. All right. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for June 16th, 2022. Market reminding us once again today that it does not care for our feelings except for how good they taste. I want to start with just the market effects first. Market health check. As I said, you got to get the market right for 50% of the fight. All right. So yesterday had that what looked like it could be a bottoming formation. It was setting up a 1, 2, and then potentially a 1, 2, 3 entry if it had taken out the high of yesterday without making a new low. So that was sort of the discretionary space in here. If it could open inside there and then take out the top of bar 2, then we would have a 1, 2, 3 entry. Didn't do that. Bearish normal that it is. There was yesterday's low. Here was the large gap down. Never looked back and ground down and then recovered slightly to 360. What is it? 366. So now we're 23.7% off the swing high. The peak up here where the PSAR flipped, which was our signal to go short. This is where the summer gave way to fall, has given way to winter. You can see the size of that 10-period trading range, leaving the previous 10-day ranges behind. The collapsing dragon, off the dragon, and the RL10. That's one of those unusual conditions where they're almost the same price. So here was another big signal to the short side. Closed poorly. It made a new 5-day low, 10-day low, 150-day low. That's the purple box is the 150-day range. So this is just as bad as it can be. The short-term momentum, yesterday, the short-term momentum was looking like this from the 3-period hull. But today that rolled over and now it's back to the downside. Interestingly, today's range, once it opened, the 1-day range, which is this yellow box, was not very large. In fact, it's about sort of what the average of the 5-day range was. So this was not a runaway sell-off. Most of the loss occurred in the gap, but it did break to new lows. So it kind of rejected this upside notion for at least one more day. So everybody that, bought swing positions believing that the market had turned are set up once more for maximum pain event. The market once again looking to create maximum pain in the feelings because those are the tasty ones. Noticing the Z3 pinch is expanding now to the downside as this next leg down continues. The dragon spine is now well below the Bollinger Band mean 30. PSAR is rolled over, obviously. Yeah, all things bad. The simplex version of this now is, yesterday as we looked at this as a 1, 2 with the possibility of a 3, was predicated on the idea that if we got that kind of upward move, then we would see an uptick in the in the MACD. We've already been in Williams percent R10 oversold for a long period. And so the WMB3 strategy is looking for an uptick on a MACD, but it still hasn't gotten it yet. So it would take quite an extraordinary move for this to become an uptick. When that does, then we're in the window for a WMB3 move. If we get one of those, I will treat that as a one-day turbo, meaning I will not turn that into a swing trade. With the market down 24%, I'm not in any kind of mood to have a belief in a long-term swing position. But I will take one-day turbo trades, get what I can, and then see what we get. That sort of summarizes my mindset right now. We'll shift to the sectors real quick. All righty. So we've got the S&P here at -3. Emerging markets were a little better. Now I'm sorting this one by percent loss at the top because that's where the joy is, right? Emerging markets down only 3%. The Dow off 2.4. Treasuries positive 0.79. This was the cut line between negative and positive. Worse than the S&P, tech was down 4%. The Russell down 4.6%. So between, the spread between the indexes there was almost 5.6% between treasuries and the Russell. And even the best between the best equity index and the Russell was 2.3%. So quite a big difference. The very few sectors that were better than the S&P, marijuana and lithium, 3%. Simon Property Group, 3%. Biotech, finance, real estate, 2.5. Mexico, staples, 2.2, and then 0.76. And then here's where the cut line comes to the, for things that actually made money today. Wheat and precious, 0.15. Aussie dollar, blended commodities, oil, agriculture is holding strong around that 22 price level, up 1%, and the VIX 6%. Individual targets that did better. Robinhood was only down 2.27. Alcoa and Microsoft 2.7, 2.8, and that's it for the things that outperformed. Not much to choose from. Individual sectors that were worse than the S&P. So the S&P again 3.31. So you have this cluster here: Arc Genomics, materials, wood, the other wood, and Bitcoin, all between 3.7 and 3.6. Tech, blockchain, large cap Bitcoin or large cap crypto, Brazil, the FANGs between 4.5 and 4%. Energy, global future of finance, consumer discretionary, 4.9 to 5.6. Arc Innovation, 6.2%. Both clean energy, PBW, and oil exploration, 6.5%. Ethereum just getting murdered, 9.6%. All of the disruptors up in here between 9% and 6.5%. So Rivian and Tesla off 8.54%, came back from 700 all the way back to 640. Still holding above 600, but Rivian also getting slaughtered, minus 9%. So Squarespace, Devon Energy. Now, Devon Energy, I hope you got some of that today, because we talked about that one yesterday, that if there was more weakness in energy, so yesterday, XLE was off 2% and Devon was off 3%. And we said, well, if energy is weak again, it stands to reason that Devon might even be worse. And so here we see XLE was off 5.6 and Devon Energy even worse at 7.5. So this was 5.6. This is 7.5. So this is the case where the mid cap target is more volatile, but generally in the same direction as the energy sector. So this is the case where you can find, where you get that market call, and then you get the sector, and then you get the target, because you're trying to find the mover. So the market was down. The sector was down double, and the target was down triple. So that's how that works. Coinbase and Bakkt 7 and 6.5. Cliff reversing yesterday's trend in the metals, 6.3. PayPal, US Steel couldn't hold. Apple underperforming at 4%. So lots of things to choose from for tomorrow's pain and suffering. All right, let's jump into sniper trades of the day. So CME has been on our list for all week. Started off as a divergent trade. Earlier in the week, when the market sold off, and then had the Fed day, which was up, and then today gap down and sell off. When the whole market was getting punished in here, CME diverged from that. It had on those days, it had a gap down and then finished strongly on both of those days. And yesterday was also a pretty good day. And that's why that divergence makes CME interesting. It looks like a kind of flight to safety or something like that. So that's why, as a continuation trade, it's on our radar screen. All right, so right from the opening, there's a $2.50 R10 standard risk. There's half the risk box in blue. I noticed the gap down and starting to roll up, so I've got the baseline there. If it violates below that red line, what's my play? If price were to fall through here, what's the play right there? CD, correct? So that would be my CD line. Anything below that line is going to be potentially to the short side. Doesn't mean I'm automatically going to do it. It'll be the best candidate trade at that time. I'd rather not get short something that's been strong, but if I'm there and I see the opportunity, then it wouldn't surprise me to take it. Okay. Funny that way. Starts making its move, makes a higher low. Didn't hit my trigger for the downside. Now, what could we call this? Oops. What could we call that entry? Noticing that I'm taking the standard risk box here with an entry here. Standard risk will be here, My actual execution would be this red line here, as you see, at the belly of the belly of the dragon. So I'm really only risking that much of my total risk box. So that's looks like about a 0.3 and a 0.7. So I've already minimized my risk to 0.3. I would think of this as a K2. Yep, because we got the support level. Have a support level here. It raises up, support level here. It's crossed the dragon. Now I'm front running the PSAR flip a little bit here. So I'm watching that. Anything north. So if I'm looking like this, if that's the way the PSAR is going to continue to decay, anything north of those, I'm looking really to be long. So this is a potential trade to here, a tactical trade to here. You know, if it gets above this, that's a good thing. It's got to get above the peak of that dragon to be really interesting. So I'm building some trade architecture here, trying to anticipate what it may be doing out here in this region. Like if it gets above here, it's going to go, and then it's easy. So I'm really trying to figure out what it's going to do inside that space. Check or hold. Now, if this thing rolls over and falls through here, then it's still going to be that CD. But if it rolls through here, I don't want any part of that on the long side. So really, I'm only risking that little bit. And I'm really going to look to see how soon I can get my risk out of that so that I can lock in some kind of gain. So standard trade template, standard frame, standard execution. Check or hold. See how this unfolds. Now at the first break above the PSAR, here's where that PSAR continued to decay. So now I've got that break above the PSAR, and I'm going to do two things. I'm just going to say, put my second position on. I'm going to raise this stop from here up to here to lock in the gain. And then what I'd like to do is be able to, at some point, lock this gain in so it can take, you know, I can protect against that second position because I'd like to get my, second position locked in. Now, you don't have to take that move. That's an aggressive play, but CME has been really strong all week. So, in my view, the fact that it gave me like another Kata 2 moment here and then broke out across that made me feel like, you know, why not? My stop is so close that would be about a scratch trade on two positions. So I decided to give it a shot. And most everything else was grinding today. This was the only one of the few that I had that looked promising. Now I feel pretty good about this. I like to do that. So just enough to make it positive, because I've already got this one locked in. So I'm going to be okay on this trade, but I like to give it this much room. I like to give it that much room to work with. I'm giving it that little bit of room below the 1 bar low. If you don't put that second position on, then it's then you might want to if you don't have that second position on, you might want to have moved up and locked in more, because now you only have one position that's working. So you're not getting double goodness out of that. And that means you might want to then, you'd be locking in this gain on one position, which is legit. Check or hold. Now I show this one because I want you should already be feeling uncomfortable. If you've been listening to me, that should feel uncomfortable to you already. Should it not? Because all I can see is a nice run up, but then starting to decay. And I feel like if my stop is just here, and I've only locked in this much on the first position, or if I was able to lock that much in because I put the second position on, I feel a little uncomfortable with being this far away after this much rolling over. I would much rather have been up in, where's my drawing tool? There he is. I'd much rather have this thing. Once this started to decay here, I think I want to be, maybe spine of the dragon, something like that, and just lock in the extra piece, especially if I've got two positions on. Now, remember, that's times 2. So that's my thought on that one. Spend much more time suffering through that than about the entry. And now, after, that one feels correct. And then even on this one, I wouldn't be offended if you had just decided to take the southern skin of the dragon or the PSAR. In any case, by this time, when this thing has had like 8 bars to get better, I think you got to have your stop right about there. No matter how you got there, by this time, you want to have locked in that much goodness against, against that much open risk. So I'm keeping most of it compared to how much I'm giving it room to play with. That's my thinking. And by this time, I just go ahead and drop in, the half risk box, and the PSAR is already better. So I kind of like that stop right there. So it gives it a little bit of room on 2 positions, but off we go. So CME trade of the day. Mexico. Very volatile right off the get-go. So I'm not in any hurry to chase. Just want to see it develop. Here was the opening. This was a big gap down opening. You can see the dragon up here. So this is a big gap down. Sold off harsh. Made a low of the day here. And then reversed back up to here. So certainly, if it violates that opening range 5 minutes, I'm going to be large down in the form of a collapsing dragon, right? If you were a hybrid frog trader and were using that little box, you might have gotten a position, short here, sold off, started coming back up, and maybe took half of it and captured half a risk box. I didn't do that. We're not in that much of a hurry. Starting to sell off. It feels like yeah, this peak, and then just feels like it's bailing, failing. And here's that hard low of the day. CD. Standard risk box. Check or hold. Collapsing dragon. On this one, by this time, you could consider a second position and then bring this stop down to like here. And then as soon as you can, get your second position locked in. If you don't put that second position in, then this feels like a natural place to capture this much of the move so far. Okay. And then you're giving it that much room to play with. Check or hold. I didn't put a second position on. I was broader rather than focused today. It started to sell off another leg down there. But then gave a little consolidation doji, started to work its way up. So I took the half a risk box, brought that over, stacked it on the bottom, and took the exit right at the edge of the dragon. That felt natural, so I get that trade. Which locks in, looks like about maybe an R. I'll take that one. Now we're stalking this. And maybe that could be a turning point. Who knows? So I would call that one a supported spring crossing. I'm going to take my execution exit right here. So that's the standard risk box. It's also a PSAR flip box. Anytime you see those big, thick black boxes, that's where this PSAR, which is trucking down right here. So that's right inside the PSAR. And then the new PSAR dot's going to print right there and then start tracking up, something like that. So this black box represents the PSAR flip box. And it's also the same size as the R10 standard risk, in this case, 25 cents. But I'm going to execute, like I'd get out of this right here, Because if this price rolls over and fails through this price level right here, what am I going to call that trade? What am I going to call the short here? Or if I wait long enough here, either one of those, what would we call those? CD. Yep. So always looking for the contingency. But meanwhile, the other thing I have to do is get my risk out of this at some point. So that I can lock in my science project. Still nothing. Now it feels like about by this time, I'm noticing the PSAR is starting to track up. By this time, I feel like I could probably get this to about here and lock in that science project. So this is still kind of too early. I wouldn't be offended if you decided to scratch and then re-entered. That's fine. But by this time, if you're looking at that pattern and you see that, your execution risk by this time, you could have either kept this all the way here and then rushed this up to about there, or you might have on this little move here, you might have decided to come up and lock it in underneath the dragon and then stair-stepped it up to here. Either one of those is fine, because again, it's allowing you to turn this into a science project. Either way, I like the stair step. I'm a certain distance into this thing already, about 1R, it looks like. You know, if that's my 1R, then this feels like about +1. It starts rolling over and I'm after +1. So I take my half a risk box, hang it from the top. As general guidance, I think I'd like to have my stop now right about here so that I can lock in that extra piece now. And I think I ended up getting out of that shortly thereafter. So about 1R on that one. Check or hold. Mexico, a frog champion. Brazil, another frog champion. Same kind of pattern as Mexico, not surprising. Same pattern, same trade. Only this one, I stuck around way too long because I had some belief in Mexico or in Brazil to the downside. I kept waiting for this thing to fail and break down, and mostly because of how steeply down that was. Whereas Mexico was not as steep, this was steeper. So I looked at this as, man, it's going to fail at any time. And at this point, I had to lock in something because now the dragon is starting to turn. So not great exit strategy. I mean, the purely efficient one would have been here. That's also a 1, 2, 3 exit. So that wouldn't have been bad. Probably better. Because then if it fails, if it fails from here, I could just re-enter short. So not a especially good exit efficiency on that one. Breaks back through the dragon. I'm short. Caught a 2 to the downside. Scratch. I was better this time. This was a 1, 2, 3. Learned my lesson. Feels like a SSC. This was me wanting to trade. So this feels like the harsh. That's the harsh play. There's the support. There's the crossing of the dragon. There's the PSAR coming down. That makes this an SSC. Standard risk box is here, but I'm going to execute off the belly of the dragon. So I'm only going to actually risk about 1/2 check or hold of my standard risk box. Scratch again. I was just had a belief and I had a feeling. So don't trust your fear. So instead of locking in again, I could have locked in the no lose plus dinner for 2. Should have, didn't, gave back that much plus this and scratched it. So felt pretty stupid. So I forgive myself. Keep going. Re-entry caught a 2 to the downside. Standard risk box. I'm not going to let it get above the peak of the dragon. So again, I'm risking about 1/2 of the standard risk box. And now this time I'm determined that I'm going to map the half a risk box to the downside and see where I am to see if I can't improve my exits, because this thing is grinding. This is not running away like it is supposed to. This thing is kind of getting locked into this crap. So I got to play stricter defense. Scratch, caught a 2, scratch. It was like, okay, nothing there. That was trading for the broker today in Brazil. No follow through. I gave it 1, 2, 3, 4, 5 chances. The net was maybe slightly less. That was a win. Scratch, 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 micro loss. So nets out to nothing. I'm just practicing making sawdust on that one. Cliff Natural Resources. This is in the steels. Notice in the the PSAR. So anything that breaks. So if this breaks below that rising PSAR or that C, that's going to be like a CD to the downside. Sure enough. Standard risk. Now, by this time, I should be able to get my, now on this one, I wouldn't be offended on this short if you were at the PSAR or the top of the dragon. Either way, by the time you get that, you need to be there or in here so that you can lock this in. I wouldn't have been offended if it got this maximum excursion and then you just took it right there. And that's where I should have been. Not very good today. That's where my trade should have been. Because if I look at my blue box and bring it over and hang that blue box in there, that's about where my exit should have been. And just have been happy to take that trade on Cliff, but we didn't do that. Lucky, and then got better on the second one. So I ended up getting close to what I should have gotten, but I got there in an inefficient way. That's about a C- trade management right there. Dragon starting to turn. Should have already been short. But now it crosses the dragon, crosses the PSAR. So here's our little PSAR dots. Here's that support level in the dragon being established. SSC entry. Standard risk box is here. But I'm going to execute at the bottom of the dragon. So again, I'm only risking about 0.3 and trimmed away about 0.7 of the risk on the standard risk box. Check or hold. Lucky should be here. Now probably here. Bad form again. Should have been here. Ended up here at the spine of the dragon. So I gave back. I only captured half of what was available and gave back too much. I should have been right there and kept that extra little piece. Disgusted with myself. It started getting into the chop. Tesla. In the pre-market, I noticed the belly right there at the blue line. So I'm thinking if that breaks down through there, I should be short. Short, standard risk box. It just wasn't happening. It's about a 1, 2, 3. I wanted to get paid. I was suspicious on this one. Because I felt like as bad as that market opening was, this thing should have been failing, and it wasn't, and it was starting to roll back up. So I wanted to keep a little piece. That's like the no lose plus dinner for two. The PSAR hadn't come around yet. So this could very easily fail this way. If it does, I'm probably going to be right here. On a CD, or if this thing just keeps getting stronger, I might be able to do this. Like a SSC. So that's my visual trade frame. I end up getting the short. Look at that, right on the money. Nice job. Right where I'm supposed to. On this one, I probably want to lock in maybe this. So I'm risking this much of the risk box, which is about 0.7, and that's about 0.3. So trimming my risk. Yuck. Yep. Just nothing there. Maximum favorable excursion. There just wasn't much. Why did I get in? Why did I get in? Because this thing is failing. It rejected the dragon. And now that's a kata 2. That's standard entry. I got out because it did not fail. It's supposed to fail. It did not. And it has come all the way back up here to scratch. So I get out. Why do I get in to get out and get? Because the signals demand that I do that. On the first out, okay, on this one, on the first out, why didn't I keep the trade from the top of the first red dot? Why didn't I keep this trade? Because this thing failed to fail, and it was at no lose plus dinner for two, and it's already at the spine of the dragon. And my rule is I was at no lose plus dinner for two, so I just get out. I mean, I have no idea what it's going to do after this. I have no idea what it's going to do there. I know what it can do. I know that if this thing goes up this way, I'm either going to get long right here or long right here. But I also know that if this fails out of the dragon, I'm probably going to get short right there. So here's a chance to just get out, get paid 0.2, and now have a trade frame ready to get long either here, or get short there. Every day, every trade, 100% of the time I do that. Now, what it did was immediately fail. So what did I do? I just get right back in. Why? Because that's the trade, because it's here and it's here. It rejected the dragon. It's getting ready to fail through the low of the day. I get a standard risk box right there. I'm only going to take that much of a loss anyway, so I want to see it break down and go. I thought I said that. It did the same thing again. It is supposed to fail. This thing is supposed to fail. It did not. It held support, so I got out with a fractional win. This thing is supposed to fail. It's not. It's going sideways. I hate this already. And I ended up getting out here with a scratch. Now, from right here, it could go here or go there. If it breaks above the PSAR dot, I'm long. If it breaks below this, I'm short. This is exactly the same condition as here, only I'm up, no lose plus dinner for 2. I'm at plus 0.2 right now. Scratch. Re-enter short. Now, why would I re-enter short? Because the PSAR is down. Here's the PSAR lid on it. Here's the low of the day. It's on this side of the dragon, so I'm short. Here's my standard risk box. I'm going to execute right there because that's the top of the dragon. So I'm only going to risk about 0.4, and this is about 0.6. So I want this thing to fail right away. Hooray. It failed a little bit. Now I can get my risk from here. Probably I should be like right about there, so that I can now lock in this much gain, which is about 0.6. So I got 0.2 from this one, scratch on this one, and I've got 0.6. So right now I'm holding 0.8. Check or hold. This is what grinding looks like. Some days they don't just run away. Some days all you got is grinding. And I took it. Do you see why I exited? It is supposed to fail. This thing is supposed to fail. It did not. It had 1, 2, 3, 4 bars to fail. It did not. It's starting to roll back into the dragon. So I'll just get out and take 0.8 instead of 0.6. Now, with my 0.8 from here and my 0.2 from here, I'm up 1.0. Grinding. Relentless. I spend no time worried about that crap. I just execute that like a juggler throwing the next ball. Throw it and catch it. Throw it and catch it. Try not to drop the egg. I'm noticing this. This is starting to roll over. Standard risk box of about 70 cents. Half a risk box here. Devon Energy. Why was it on our list? Because of yesterday. Short. Standard risk box. I'm going to take, because of where that is drawn compared to the Dragon, that's a full 1.0 risk. By this time, I've got to have that into about here. So that I can lock in this much gain. Science project. No lose plus dinner for two. Don't lose money. Low, started to reverse back up. Could have been out here, gave it to the edge of the Dragon, took that trade. Here's one. That's about 1, 2, plus 2. Standard grinding. SSC. Big harsh move, bottoms out. Dragon getting flat, crosses the Dragon, takes out the PSAR. There's my entry. Here's my standard risk box at the bottom of the Dragon. Once again, I'm going to risk 1.0. My job is to, as soon as I can, get that up into here to lock in the science project. How many times do you see me draw that on these sniper trades? 100% of the time. It's because that's the only thing I worry about. Hey, that even looks like, guess what that looks like? That almost looks like that looks like our little Kata 2 guy. It's not, it's an SSC, but couldn't help but notice. Lost to half. So plus 2 minus a half. We're at net 1.5 so far. Kata 2 to the downside. Anyone? The standard, so that's going to be the entry right there. That's the size of the standard risk box, which is this one and that one. I'm going to execute at the top of the Dragon. Oops, let's get that drawn. I'm going to execute at the top of the Dragon. So I'm really only risking that much, which is about 0.5. And I've taken about 0.5 of the risk off the table. So this is Kata 2 to the downside. Now, if it gets below the PSAR flip and the belt right in here, so any movement in this area here is just tactical noise. And I want to be very precise and excellent in there. Nothing. It never got out of the tactical zone, which is that blue box. It just never got out of there. And I took the scratch. It's supposed to fail. It did not. So I don't want to lose any money on that. Yeah, but Ken, your risk box was here in your full 1 hour. Why don't you wait and just see what it does? Because I don't believe in the trade. This is where it had it had 10 bars to fail and it did not. So I'm not going to lose money up in here changing my mind on what kind of trade it is. It's supposed to fail right away. It did not. I'm out of this thing. And I'm actually looking for some kind of entry up in here with a standard risk box like that for the long side, because this was supposed to fail and it did not. Maybe it's going to do that and come back up and test this. And if that's one risk, there's 1, 2, there's my 2 to 1, 2 units of risk. So that's my trade. Check or hold. You got to be able to lay those templates on there that fast. Nothing. It did not go up and hit my. It did not go up and hit the PSAR. Oops. It did not hit the PSAR. Instead, it rolled over, came through the dragon, caught a 2. It had a high, a lower high, another lower high, caught a 2. I'm going to execute right there. So I'm only taking about half the risk box. That's the standard 1.0 risk box. I'm only taking about half of it. I want to see this thing fail right away. Enough. It failed enough to give me something. It was enough to give me this much. That's about 0.5. I'll take it. That pays for this one. I don't remember where this one ended up. I don't think it did much more than this. So I'd be executing from here. By this time, I kind of want to, it's been such a grinder. I want to get it to there. And then I don't care what happens. It was not a big follow through, if I remember. Grinding today. Today was just grinding. ARE, that's that real estate company that was a Godzilla and a continuation. And I'm noticing the great big gap. If that fails below, off we go. Just like downtown, standard risk, scratch. Should have been short or could have been short. Had a lot of other things going on with those other symbols. This thing was supposed to fail and it did not. It's just starting to drift. It could have been short in there. Decided that this is worth a shot because this did not fail. I'll take that shot with the stop right there. Scratch. Short. Fractional loss. Just nothing going on. So this thing probably nets out to minus 0.5 between all three of those. Pain in the butt. Grinding. Peak. Another one of those Godzillas. Oversold. Uptick. WMB3. Here's a 1, 2, 3 risk box off the bottom. Why not? I'm hoping it's going to come up and close the gap. By this time, I could even have this right here. Lock in the gains. Pretty good. Re-entry immediately. It did not fail further. Found support inside the dragon. Standard risk box. Micro win. Re-entry caught a 2 to the upside. Micro win. I was stalking like a sideways quiet channel breakout on this thing. This one showed more promise on the long side than any of the other ones that we saw so far. So I was taking this as a sort of a positive sign to the upside. And so I was ready to see it break out. But because the size of the gap downward was also so big, and this was Godzilla, I was also ready to play the downside. So I'm just treating this. I took the standard risk box. That's only 20 cents. And I put a 20-cent box around that price and called that a zero state. And if it breaks out, I'm long. If it breaks down, I'm short. Never took the trade. Nothing else was going on. There were other things going on, but that's where I was. So this one paid a little bit. Here's a grind. Here's a grind. And here's a grind. This is about 0.3, 0.2, 0.2, nets to 0.7. Do you want 0.7? Then you must be prepared to grind. The Russell, I was ready for big pain on this one today because there was such a big gap down from the futures and then the market. So here's where the break was in the PSAR. Collapsing dragon, got paid. Checker hold. Caught a 2 to the downside. Got paid. SSC. Got scratch. Caught a 2 to the downside. Micro loss. SSC to the upside, maybe a caught 2. Micro loss. What are you going to do? There was just no more follow through, but got paid well here. If this is 1, that's about 1.5. So that's 1.5. This one is about 0.5. So now we're at 2. Scratch, we're at 2. Loss of 0.3, loss of 0.3. So net 1. Do you want 1? Then be prepared to grind. I grind on every trade. Sometimes they run away. Here's Tesla later in the afternoon. PSAR flip box. Standard entry, standard risk. I will execute on that to limit my loss to 0.5. By this time, I should be like right about there, edge of the dragon. And I should have locked in that much. Check or hold. Exit, standard exit, far side of the, crosses back over the dragon, hits the PSAR somewhere in there. And getting close to the end of the day, so I ignored it from there. So that was about, if that's one, plus one. That's grinding right there. Okay. So lots of grinding today, maybe 4 to 5R cumulative. Seen these already. So go into bearish normal conditions, oversold everywhere. The risk Z just went negative for risk off. So the downside is really favored now as it just dipped below the 0 line. You can see the strong companies. You can see the weak companies, Alcoa, Tesla, Intel, Brazil. Everything's on an auto framer. Plenty of 5-day down sufferings. You wouldn't be surprised if you've been paying attention. Auto framer, buyer's market or seller's market. Look at all the auto framers. This is the order in which you should be prepared to short them on collapsing below the previous day's low. So many of our usual suspects in there. Finance, diamonds, real estate, cliff, materials, Brazil, the S&P, U.S. Steel, plenty to choose from. Some key names in there for the squeezes: Microsoft, diamonds, real estate. McDonald's is pretty close. Tons of Godzillas. Sorted by the severity of the 5-day Z-score. But you can see everything is just murdered on the long-term and midterm. Names we recognize: PEG, Southwest Airlines. God, you got to be smashing those guys. Holy cow. Why aren't we doing that one? In the tactical symbol set, all of the cryptos, the ones above that black line are all the ones where the Z-score is more than 2 sigma. This set is all between 1 and 2 sigma. The S&P, diamonds. So the whole market itself is in a Godzilla. So this is prime time for intraday momentum trading. No fireworks. Nothing is near the top. There are no fence sitters. They're all failing. The most volatile based on the 5-day Z-score. The most quiet in the S&P based on the 5-day Z-score. To hunt for candidates, you've already seen this sniper auto framer. Winter everywhere of surprise to no one. This is the tactical symbol set based on the Z-score of the 5 days. So you can see who are in the most extreme of conditions and which ones are actually relatively quiet. Look at that little oil and agriculture, blended commodities. That tells the tail of the tape right there. Gold, silver, oils, and treasuries. Boeing and nothing else. The big move down. It's rejecting the Bollinger Band mean. A whole new leg of collapse. Rejecting the Bollinger Band mean. Ooh. When that couldn't get any further, look out below, look out below, look out below. This was Ed from yesterday. We didn't get time to mark him up. This was CLX PSAR flip box, pretty good short, crushed it. Excellent exit, 4.5. This entry here, I think, should have been back here. Then that pays off. I would have probably tried this one, except you're into the Fed, and then now you're trading in the Fed. So take your 4.5 on a Fed day and then take a break. Ed's first 50 in the sniper. This is pretty good work. How many times have you started a new system and then 50 trades into it, you have this kind of performance? 50 trades, best trade 6, worst trade minus 1.8. So we got to fix those. We don't want anything less than 1. 30 wins, 20 losses. So that's a 3-2 win rate. And then his average win is 1 and his average loss is 0.6. So that is a 5-3 payoff ratio. So you multiply that out. That's 15 divided by 6. That's 2.5. Pretty good stuff. You'd take that. If you could get that in Vegas, you'd take it. All right, Paul. Euro dollar. Low, higher low. This is the PSAR flip box. Quickly scratches. Could have gone as early as here, but he waits for the correct entry here. PSAR flip box, really good exit. Caught a 2 re-entry. Great exit. 2.1. Nice. This looks like some kind of crypto or something. Capital.com. Oh, no, I'm sorry. That's the name of the broker. So dollar and Swiss franc. Here's the PSAR flip box. He gets out of it pretty well. Accelerates the short. Now, the last one, he waited until it hit the PSAR before he got short. So this is an effort to front run that. He trimmed it correctly. Now that's the one he wants. And there's the risk box. Gets paid. Now this one comes into the dragon and starts to reject. So he re-enters. Quick scratch. Could have gotten short again here. Takes this one. It reverses. So he scratches. Now on this one, this is where you got to have the entry. Then if it gets that far ahead of you, you could be exiting where you entered, and then that would pay. But even if you get this one long, and I don't know why you are long here, but if you are, then you got to cut it here. This is way too much give back. This is a great short. This is where the reentry could have been to get paid. This is a, this is like an SSC. I would prefer you wait for the PSAR flip and then take this one long, and then you don't take that one at all. So I think with some of those corrections, you'll reduce most of that loss and probably get to parity. The other thing I'm going to just notice is there's your risk box. It never flinched all the way down through here. So look at all those trades monkeying around when the primary signal is this one, short, leave it alone. Now you probably got to get out here and then re-enter there because of that violation. That's fine. But look at the river, look at the dragon, look at the PSAR, choose your direction accordingly. Arch. PSAR flip box. Oh, I'm sorry. Oh man, look at this PSAR flip box, crushing it. That's where your short should be. And then exiting here. So that was there. So getting short there, we should be short here. Then that would at least scratch. I like the long. This is where you should stop and reverse. So you could be short here instead of here, but that's still great. This is a great long. This is where that Kata 2 comes into play right here. So you're long here, and then you get paid to here. PSAR flip, excellent, short, and you got what was there. Here's the next PSAR flip box. We could be short here instead of here. Then if you were already in the money, you might have been able to get paid here and then re-entered. So still really good. 3.8. Oh, there's more. PSAR flip box gets paid. PSAR flip box should be short here instead of here. And then on this great big excursion, when it starts reversing, get out here instead of here. And then you get a great payday. So this could have been 6, but we'll take 4. That's good work, Arch. I think of him as Captain Jack Sparrow already. PSAR flip box. Perfect. Now, on this break, second position. On this little reversal here, third position. Now, if you get 2 or 3 of them in there, and you see this little failure to fail further, take that, edge of the dragon. Because especially if you've got 3 positions on, you don't want to give back that much on 3 positions. That's why if you got 3, you want to cut that there. PSAR flip, pretty good. Hard to get better than that. Maybe we could scratch. I don't know. The next PSAR flip box, we should be long here. That's pretty good. I think you should be getting out here and then re-entering here. And now when you get this, son, you can't let that come all the way back here. You got to get out at the 1, 2, 3, and then get this short. You're already up at Z3 and you gave back half. Don't do that. Cut it. Great short on the PSAR flip. You got what was there. PSAR flip. He's long. You're up at Z3. Get paid. Now we're starting to get into the chop. We could probably rest and relaxate in here. And now that we've got some directionality, big PSAR flip and crushing it, that's really good, man. That's 5, could have been 10. Very good attention to detail on the PSAR flip boxes. Luke. Real tight box on the Z3 pinch. He tries the fake 1, go 2, 2.6. Here's the PSAR flip. He could be short here. He gets this one. Hard to improve that. That was just pretty fast. The reversal, CD, got paid very well. Here's the PSAR flip box. We could be long here. We didn't give up much by waiting. Reasonable, excellent. Still pretty good. Worth a shot. Quick scratch, get short. Now, on this one, I want you to start feeling this. The faster that this happens and it doesn't go up very much, then the better this short would be for a second position. And then if you're here, you got to be out by here at the edge of the dragon instead of coming all the way, because that's just on one. That's probably okay. Then that could be the stop and reverse rather than this one. And then we gave back that much to keep that much. So we gave back 80%. This was slow to get in. PSAR boxes here, slow to get in, quick scratch, micro paid, probably too tired to trade. But that's 7 for the day. Keep grinding, man. Woj, finally, dude, in line with the great big movers of the day. Aiming for that one. Quick loss, quick scratch. Excellent stop and reverse. Excellent. Oh, dude, right here. PSAR flip. Standard risk. Get paid. That was worth 1.5. Pretty good. PSAR flip box. Got to be on that one. 1, 2, 3. Got paid. Quick scratch. Missed that one. Too late. Good reentry. Better reentry. Could have been a second one. That's all right. 5.5 for the day. Nice work. Is working the span of control on Tesla. Yeah, we saw this already. A lot of those usual suspects like Peg, which is still on a Godzilla. There just wasn't much there. There just wasn't much in Tesla. You saw me grinding on it too, just wasn't there. Pretty good work on PG. On this one, there's your PSAR flip. We could try that there instead of here. And then you get paid on this with a re-entry and gets paid. Dragon rolls over. Good job. This is where our re-entry is right here instead of here. That way you get paid better. Still, nice work on those. Good stuff, guys. Way to hang in there. Today was a grinding day. When you're grinding, you should be like in the zero state all the time, right? So in the zero state, the energy that you expend in making trades is replaced by the acknowledgement that you are doing your job with satisfaction. So you end up netting 0 on your emotional state. So you should be able to grind indefinitely. That's just a matter of doing the road work, putting in the mileage, expecting to grind. And when And so when those things work and they work great, don't believe in it. Just say, all right, well, I was ready to grind and it gave me a bonus. That's fine. So mental toughness. All right. Good work, guys. We'll get this published and posted. I'm making a separate lesson of yesterday's opening 40 minutes because we thought that was pretty good. So I'll get that. I'm going to try to get that posted later tonight. All right. See you tomorrow, guys.